Trump's energy stocks will help you retire. This is not financial advice, but my research suggests it's a good idea to look at ExxonMobil before the end of November, ticker symbol XOM. A lot of energy, oil and gas CEOs were unsurprisingly positive as far as guidance goes when Trump got elected. Interestingly, a lot of solar stocks did incredibly well this year as well because they're here to fill the gap for data center buildouts until we get nuclear down the road. Right now, the market looks choppy. Might go sideways for a month. I'm not here to make up predictions for the market as a whole, but a really safe stock is ExxonMobil, ticker symbol XOM. Earnings were a beat, revenue missed, but the stock looks to be holding up, and $7.5 billion in revenue is still within expectations. Guidance is cautiously optimistic, and there really isn't a lot of safe havens, not counting cash, for money in stocks right now. So that's the idea. Let's jump into a little breakdown.
This is Sam Putnam.
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 Okay, so this is what you're looking at in terms of earnings. So you can see that the earnings beat, the reaction was muted, big rebound recently, and building out kind of a mini flag if you're a short-term investor. Otherwise, you can just say, look, this broke out of a big base. It's over this 115 and change chop, and really seems to be one of the only sectors that seems to be, I say that cautiously, holding up. We'll see what happens. Crude oil is down a little bit over the past week, but no big down days like the market as a whole has had. Of course, the market as a whole, meaning largely NVIDIA, AMD, Palantir, the big tech companies. AMD actually looks fine, but the Palantir earnings sell-off was pretty rough. So it's just hard to find any sort of easier opportunities like existed in September. I mean, quantum was crazy. Nuclear was a crazy run. Uranium with that as well. And now we're on the backside of all these moves. So you have to be really careful looking for opportunities when we keep having Trump and Xi meetings that result in big sell-offs, even when the meetings are good. November 30th in South Korea was thought to be a positive resolution to tariffs, but market said nope. So energy looks solid. If we look at little energy stocks, Dino holding up, actually gapping up right now. Par gapping up as well. And the big ones, Chevron, chopping around but holding. In my opinion, slightly better looks ExxonMobil, because you can risk off of yesterday and the day before. And the day before. Yesterday being the last business day, so Friday. Risk $1, make 10, 20. It's not like you need to look at your phone every day, but it'd be good to check in once every couple of days, maybe once a week at the least, because the stock does move 2% a day. So worst case scenario, you have a 500,000 portfolio, you put 10% in this stock, and that means you're down $1,000 a day. Worst case scenario, each day the stock goes down the amount that it normally can move. So looking at your portfolio every few days starts to sound like a good idea. So that's the ticker. In terms of what these guys are up to, I know typically you would talk about what a company is up to before you talk about whether it's worth buying, but given the current environment, just looking at where money is actually flowing, which you can see on the chart, is a lot more honest than checking on speculation as to whether they're going to discover new oil fields or increase production or decrease production or spend more money on capital expenditures, which 8.5 billion spent in Q3, over 20 billion this year, but that's actually a little less than they were targeting. So it's a kind of sector where a lot of money gets spent, and it's the kind of stock that is basically a safe haven in times of uncertainty. And if we look around the big ETFs, the indexes even, QQQ looks fine, but only because we had that huge bounce on Friday. So Tesla had a big bounce, which was basically the consumer leader. If Tesla had rolled over here, it would have basically signaled that the euphoria or the energy is sucked out of the market, and your average investor is not interested in buying the dip, which more and more the average investor is creating these sort of patterns. It might sound hard to believe, but that's what growth in Robinhood suggests. So Tesla definitely one that doesn't move with the market as much as stocks like Nvidia, because it's such a sort of cult stock, but that bounce will be really positive for the entire market. So XOM is the ticker. If you like these ideas, hit that like button for the YouTube algorithm. If you want a free course on how to buy stocks before they go up, put that together. You can get access to that when you subscribe. And if you want to have someone look over your portfolio for a very reasonable $25, head over to stockscommunity.com. See you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.